Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice. All right. Hey, everyone. My name is Jose Macedo, and welcome to another episode of the Hivemind podcast. The goal of the podcast is to provide an inside look into what we like to call the Delphi Hivemind, bringing together some of our brightest minds from each of the divisions to share insights, alpha, and shit posts. Today with us, we have Ceteris, newly promoted to head of research. Congrats, Ceteris, on that. I think I'll have some words to say about it later. We have Jan Lieberman, managing partner at Delphi Ventures. And we have Ventures associate Duncan, also known as Flood Capital on Twitter, prodigious shitcoin scavenger and investor. I lead Delphi Labs, our protocol R&D arm focused on incubating and accelerating new Web3 primitives. So it's been a hectic week in crypto. I think we wanted to start by talking about the Jupiter launch, but maybe before that, Ceteris, you want to say some words? I know research is hiring.
Yeah, so research is hiring right now, looking for infra and DeFi analyst, at least one of each. So I have a tweet on my profile, pinned to my profile, that you can find on Twitter. We have a job link in there. And really what I want is, if you are interested in one of these roles, just write something and like have an opinion about something. The one thing we really want when we're hiring is people who have opinions and can take a lot of information, distill it down, and kind of tell readers why it matters. And so that's what I'm looking for. I don't care about like your background or anything. If you write something really good and you put it through and I read it and I like it, that puts you in a good spot. So that's all I'll say. Yeah, if you're interested, check it out. We have got a lot of applicants so far, so that's good.
Nice. Excited for your reign at the head of research. And if anyone wants to join the best research team in crypto, this is a good shot at doing it. So who wants to kick us off? You didn't mute for that, by the way. You sneezed really loud. But
I'm
all good.
I turned off my I can't hear you guys anymore.
I thought you purposely just like unmuted and sneezed and then muted again. Just like, sorry guys,
Yeah, what are we talking? We want to talk the outage first, Solana's outage, or Jupe, or what?
I think let's go chronologically, so we could start with Jupe, maybe.
Okay.
Who wants to start us off on your thoughts on the Jupe launch?
I mean, okay, I'll start. I don't know, it's kind of weird. The launch pool, I guess they explained it a lot in the docs and everything. I think people maybe did not look hard enough.
I thought it was like a market making agreement when they had that. Like I thought that like reserved for the LP meant like they were going to loan that out or something.
Yeah, well, they did do some of that. So let me explain it. Is like they set up this pool that it was single side Jupe that sold it from 40 cents to 70 cents. And then, going back down, once the pool got USDC, it would like go the other way too, right? But the pre-market price we're talking about, it was trading like between 60 and 70 cents for a while. Right. So this was already setting it like pretty below that. So like this pool was getting bought up on chain in like the 40s and 50s, and it was trading on centralized exchanges in like the 60-cent range at the same time, which kind of showed you it is kind of like weird. But listen, it's an interesting launch. I'm not going to give any like legal takes or anything. They managed to raise like 200 mil at like a 4 to 7 billion fully diluted. Like you're not going to get that. You're not going to raise that money in the private markets from anyone.
Where, like, when are they going to pull the liquidity?
They did. They pulled the Jupe side, and now they have the USDC side acting as like a bid for people to sell into.
Yeah, but doesn't that get pulled soon?
They're doing like 10 mil a week or something. They said. I think they keep changing it up. Yeah.
They said 10 mil for a few months, right? They didn't really specify the time period either.
I think the issue is most of these, whenever you do these types of setups, right, in whatever flavor, LBP, LBA, the end result is, well, the source is usually from Treasury, and the end result is usually some form of kind of permanent liquidity.
Yeah, they just pulled it. They're just gonna pull it.
No. They moved it to a normal pool. I think they moved a bunch of
I
it
think
to
the latter is like less of the concern. I mean, I think it's just like the source of the funds that was really antagonistic.
Yeah, like honestly, I feel like this is what the incentives were for the Jupe team. And just to go over it one more time, if you like, it's like a Uni V3 range basically, where they deployed Jupe between like 40 to 70 cents. So as people are buying into the pool, they're swapping, USDC into the pool. They're getting Jupe out, but that USDC like stays in the pool at the price they bought it. So they sold, I think, like at the peak, it was like 200 million worth of Jupiter.
But it also had a 10% fee.
Oh, okay. Well, there you go. But now they said that they're going to keep that USDC in the pool. So like people who want to like sell back into it can, and they're going to like withdraw it slowly. Some of that, I guess, is going to the team, or some of it is going to go into a new pool. But yeah, definitely from the Jupiter team standpoint, this is probably like maximizing like the amount of money raised by taking advantage of kind of like the public markets. So if they can do it, like who knows what's going to happen like on the legal side, but from a strictly monetary standpoint, this seems like it was probably worth it. Like you're raising 200 million, selling the token at a 4 to 7 billion valuation, which is quite high.
It definitely sucked up though. We were talking before, like where does the money come from? And if you look, everything was down like 10 to 30%.
Yeah, on the day of the launch, because
so even if you got the Jupe airdrop, you like were probably flat unless you got like a massive one. It like on paper.
Solana ran up heavily into it, right? So there's just going to be, this is a pretty natural profit-taking event with it both running up into the event and this being like a pretty climactic new source of or new draw of liquidity for a while.
But like 200 million USDC would have been like probably 10%, at least last time I checked, of the stable coins on Solana ended up in this pool, which is like, pretty significant because all these things are priced at the margin, especially the altcoins. Like they can have like 100 million market cap, maybe multi-100 million or even billion FDV, but it's really kind of priced at the margin because they're relatively like low liquidity to their FDVs. So like sucking out like the marginal 10% of stable coins, that first day made a pretty big difference. Yeah, like everything was down, seemed like 10% across the board, but you did get a nice Solana run. Like it got down, like Solana got down to like $80 or 85 or something like that, and then ran up pretty nicely into the launch, which I think helped.
Ran up into the outage too.
The impact.
And is running past the outage too. So like before
we get into the outage, does it not seem like a weird kind of launch type? Like if you wanted to maximize money raised and like enable price discovery, rather than picking a range, it seems like you would choose something like an auction, like a Dutch auction or something like this. And then
I don't even know if you need to do any of that. You gave enough tokens out. There were enough tokens that it could have just naturally.
I think money raised and price discovery are two opposing wants here to some extent. Like I think we mentioned this earlier, the pre-launch pricing, even though that's like insignificant volume, it does create some anchoring, and then them kind of forcing that price. I don't know if a Dutch auction would have caused this to go higher than 7 billion FDV. So I do think like this was like they put the ceiling at where it was and then created a pretty comfortable floor almost. So I think this is probably like close to maximizing capital raise for them.
Yeah, that's true. That's true. Like if they knew it was going to trade like 60 to 70, they don't totally care to all sell it at that price. They know if they started it at like 40 cents, they would raise a bunch.
Well, didn't you say that it was trading at like 60 cents on the sexes and 40 cents on chain?
Yeah.
Is that for a while? Like, or is that just like a blip?
No, it was like, I don't know how long it took. If you look at the chart on chain, it looks stupid. It's like a step up for the first hour, right? As people are just
because you're kind of creating that illusion of the arbitrage to raise the money, which they probably like launched it with these market makers. This is a complete speculation, but they launch it with the market makers on the centralized exchange, like at 50, 60 cents or whatever, then start their pool at 40 cents. And then it's trading at that on the SEX. And then, people are just like arbing it by buying it on Jupiter itself. So a lot of these things, it's honestly like this market is so inefficient that I think a lot of these things are optics. Like if you create the illusion of you're getting a good deal or a good ARB, like capital just kind of flies in without like really thinking about it, or even, I guess, understanding the docs. Like this was in the docs. I just don't think people really understood fully what it meant until it launched, and then there's like a lot of outrage. So this market,
this was gonna be like 20% at the beginning of the supply, and then they ended up making it like 2.5%. So I think once they realized what price they were going to launch at,
I feel like a lot of this stuff is 80, 20, 90, 10 in terms of investing at these times where, you just look at like one piece of information and that drives your whole val. And I think one thing people are anchoring to is just comparing the Uniswap volume to Jupiter volume, and then just doing the FDV comp and saying, all right, this is reasonable.
Jupiter's an aggregator. It's not even the same thing.
No. But okay, I have like no opinion on it.
Uniswap is
here. It's pretty
right.
Too, though. It's pretty rich, but that's not even the right framing to think about both these things. Both Uniswap and Jupiter are the front ends of their ecosystem. Like that's all that matters at the end of the day. In the long run, that is probably where a lot of value will accrue to these front ends that get all the users. So you can't just like Uniswap in like 3 years, will the AMM even be Uniswap's main product? Like, I'm not sure.
They're doing the RFQ stuff, which I think makes sense.
But it's not even that. Like they're going after full financial service stack. Like they want every part of it, and they have the brand, and that's where they're going. And Jupiter is going to be the same thing. Like Jupiter really is the front end of Solana. I mean, it is. And even you go to something like Squads, with the multi-sig wallet, they have the Jupiter swap right there. Lifinity uses Jupiter, as we've talked about too, right? Everybody uses Jupiter for everything.
It's really good. Like trend-wise and fee capture-wise, more of that will like liquidity. The source of liquidity has the ability to capture more fees than the front end.
No,
I don't know.
I think the front end, because
also route to that liquidity. I think
people are going to compete on, because like you basically like Uniswap, right? Like they can put on their 30 bips fees, and they didn't really lose much market share because they own the consumer. Like you're kind of owning the front end, owning the consumer. I think that's where you can play with the fees, whereas like the consumers are like less price sensitive versus like the business kind of switching liquidity providers are more like cutthroat.
Well, it's also because they had a majority of the liquidity.
Yeah, but like I think that
Uniswap v4 is going to be pretty sticky and dominant. Like UniV3 is already super dominant on chain, and then once you have hooks and like there's projects raising significant amounts of money to build strategies that are basically hooks onto UniV4, like Sorella and people like this, I think it's going to be pretty dominant. It's just a different thing, right? I feel like Uniswap, the sort of liquidity side is like a headless marketplace, to use like the Jesse's point, like it doesn't need a front end. People just tap into it naturally. And then they're going for also being the front end with like Uniswap X and all the stuff they're doing on the financial services side. Whereas Jupiter just has that front end side, right? To being the front page of Solana. And that's definitely valuable, but I don't know. It's like,
but Jupiter's launching other tools. Like they're launching like their perps. Like I think the front end's going to be the most important thing, and where the value is going to accrue in DeFi, I think.
I agree. I've always thought that the front ends are value crews, but the thing is, like, you can think of wallets, dashboards, like all these people could go after this use case, right? Just like MetaMask launched their swap aggregator. Like if Phantom launched a swap aggregator, that would effectively, because that's the front end kind of before Jupiter, right?
For whatever reason, the wallets haven't been able to do that.
All the front ends are tapping into like the same liquidity though. So in the end, there's obviously other market dynamics at play, but I think, just thinking about it in a vacuum, if the front end is charging too much in fees, someone else can come in and tap into that liquidity. And so I do think the liquidity owner is the one who has more control of fees.
Yeah, one data point is Uniswap added their front end fee. I don't think they've seen any drop off.
That's what I said. Do you know what month? I have a good dashboard for this.
I don't know, but wasn't it something around 15 bips? It was it
was 30 bips, I think. But what do you know what month that happened in? Because I'm looking at the front end dashboard, and like Uniswap and Uniswap X just keep going up. Like I don't see any drop off.
It was 15 bips, I think, the fee.
Do you know when that happened? Do you know what month that was in?
I think it was October and it was only for select pairs, as far as I know.
Like October 2023.
We talked about it on one of these episodes.
Okay, so October 2023, Uniswap front end. This is from a Flashbots dashboard that we can share in the show notes. But Uniswap front end had 34.4%, and Uniswap X had 2.6%. So you're looking at 37% in total. Right now, Uniswap front end has 41%, and Uniswap X front end has 6.6%. So it's like, even since they added that fee in October.
That's of what? Sorry, of the trades going through Uniswap.
Yes, this is by Flashbots. It's basically like the volume through front ends, and you have like Uniswap, 1inch, Matcha, DeFi Llama, Curve, the Telegram bots. Yeah. So just like it's basically probably most organic order flow, and like even with adding the 15 bips fee, they have like grown, continue to grow their market share. Like yeah, I think the front ends are definitely because also crypto is something where it's like super about like trust right now, where like people don't want to switch. Like they hear of like rugs and hacks and stuff. Like if they know something works.
Oh yeah, 100%.
Right? If they know something works and like okay, they're gonna charge me an extra 20 bips when I'm trying to buy something that might go up 5 times or go down 50% the next day. Like I'm gonna eat the extra 20 basis points to have something I'm comfortable with and like not have to switch to pay 5 basis points now on something I don't know, and like get comfortable with a whole new interface versus like they're very accustomed to using what they know. I think where the front ends are going to compete is like on features, right? There's still pretty limited features on like Uniswap.
Yeah, I think front ends capture a lot of value. It is also like somewhat fragile though, right? OpenSea was the NFT front end. You would never would have thought like what in sort of 2021, 2020, you never would have thought there would be someone like Blur coming in and just taking over. And they really did that by targeting like the supply side, right? The kind of liquidity side. And I think we've seen a few of these shifts like over time.
OpenSea didn't launch a token, right?
No, it's like no innovation combined with no token is
because Blur just like the real thing that they had was the token, right? Like obviously I'm not like
well, it is a better UX for like trading.
But so like that's how you go from like majority to almost no market share, right? There's obviously most situations are going to be much less drastic, but I think those are the two really that cause it.
Yeah, no, definitely Blur is a good point, but I do think probably, I don't know, but Blur is a great product, but I think a lot was probably to do with the token and bringing over.
Like Tensor completely dominated out of nowhere too.
Yeah, Tensor like Magic Eden had complete dominance on Solana as well, right? Like that was and they got crushed by Tensor.
When I was using Tensor a year ago, you had to list at like 10% below Magic Eden for anyone to notice that it was being listed there. Like, that's how little market share they had. Okay. And now it's something crazy, right? Because it's also, it just is they just have like the perfect UX, the perfect interface for NFT.
Yeah, I think Jupiter just built like a great product, right? They have like the DCA feature, like it works really well. Like it's just not easy to build a product that good. That's why they kind of dominate right now. But anyway, we got sidetracked.
Part of it's also this is a good comment. Yeah, because there was always like early on when there wasn't much DeFi on Solana, everyone was talking about how well it still worked, but it was more so just Solana working fast rather than like the product itself being that different than its ETH comparable.
And a point on OpenSea, I think also there's an opportunity for Blur, not just with the token, but like OpenSea, probably like 95% of OpenSea's users just got completely wiped on NFTs when everything crashed, right? Like a lot of these NFTs just went to zero. So it's like restart.
The same thing happened with Blur, right? Like people were actually blaming Blur for the NFT bear market, right? Because they made it like more efficient to sell and stuff like this. Like I think people got wrecked across the board. It is like a much better product, I think. And
everyone blamed Blur for, I mean, the takes made no sense because you just had a false sense of reality with high floor prices and no liquidity. And then when you add liquidity to the market, it's like, okay, the true price is not 150K for a Bored Ape. Like it's probably a bit cheaper than that.
Yeah. Yeah, and I also quickly on the front end point, maybe we can save this for later for like the altcoin stuff, but like I think the Telegram bots are actually pretty interesting on the front end because like they're giving like a lot of tooling to users, and we've seen them gain a lot of market share while charging like pretty high fees. So like Banana Bot I think is pretty cool, like for sniping and limit orders and market orders, and they're building out like a web app which like is going to kind of act like a trading terminal for like on chain. So I think like that area of the market, you know, if we think front ends are going to accrue a lot of value, could be an interesting one to look at.
I've gone back and forth on Telegram bots.
What's the
initially like the main use case still remains the sniping side, right? And because most people aren't trading from their like when you're on your desktop, you're not sending messages to a Telegram bot to buy and sell assets typically.
Yeah.
So like if there's a weird gap of kind of user demographic where, you know, if you're at you're kind of targeting mobile users that want DeFi.
Yeah, but I think they're building out these web apps, which I think are going to be pretty cool and like better than like Uniswap or 1inch or Matcha in their current form, like in terms of functionality.
How do these actually? Okay, here I don't use these because they're not really secure enough for my own like anxiety or whatever. But I've never understood how if a lot of people are using these, there's actually any alpha in like the sniping.
It's a gas war, the sniping.
Yeah.
So like it worked well at first, but now it's just basically blind submissions for gas to try and get ahead of someone else, and it can be expensive if you're wrong.
But like Banana Bot is really dominant in the sniping. They're winning like 85 or 90% of the first like top of block bundles because they have like the best tooling for it. So like everyone on Banana is like putting in their kind of minor tip to kind of get priority, and then it bundles everything together, and they've been winning like 90% or something like crazy high like that of the first bundles.
How big of a market? Like sniping just isn't like that massive of a market by design.
Well, yeah. Banana's been doing like, you know, 10 to 20 million in volume over the past like few weeks, but they're charging like 50 bips on regular swaps and then a 1% on sniping. So it's like, it's not nothing for sure.
Yeah, I agree. It's not nothing. I'm more so, you know, thinking about how much bigger it can get without.
Yeah, well, I think that's where the web apps come in. Like right now, I agree. Like the Telegram use case is like very niche. Like for the sniping and also like, you know, maybe some people who want to be trading on their phone or kind of like have access all the time. But I think the web apps are really cool where you would have like basically like a sex-like interface, but like on the deck. So it's like shows all your coins there in your wallet. Like you can do limit orders, you can do DCA, you can do market orders. You also have the sniping functionality. You know, they can integrate like the CoinGecko type information in there. So like it's also it just becomes like the on-chain trading terminal.
Which yeah, then like the whole front end things, you know, they're competing with. It's gone full circle on that front.
Yeah, so I think that how they actually compete with them is like more features, right? Because like you're only going to move front ends. Like I don't think people are going to be sensitive enough to move front ends for like a few basis points, but I think they will move for like a whole new product suite. But obviously that's going to cause a war within itself.
Yeah, I mean, I think there's like two interesting things about it other than the sniping. The first one is just this idea of being closer to where the alpha is that you make like investment decisions based on. Right, like if you're in a group and you hear about a coin, you can kind of like on Telegram, which is probably where a lot of the alpha is happening, or Discord, you can kind of move to buy it like straight away with very little friction. You don't have to open an app. If you're on your phone, especially, it's way less annoying, and that's part of it. But I think when you start developing web apps and stuff, like Jan said, you end up going full circle, right? And that advantage isn't really there anymore. And the second thing I think that's interesting is like the chat UX. Like I do think there's something nice about that, and especially as crypto gets more complex and like bridging and stuff like this, I do think someone will nail like a chat sort of like interaction UX where it's like, you know, bridge my coins to Neutron and like buy this coin or whatever, rather than you having to actually like go interact with a bunch of different front ends to do this. It just like sources the root for you, and then you like approve a transaction to do it. And yeah, I'm excited to see like more people kind of like experiment with that.
There's definitely some AI chatbots.
Like functionality is pretty 0 to 1, right? But it doesn't, like, no one's really anywhere close to that yet.
Well, there's a lot of people working on it with like all this AI stuff, because like it can be human readable, like, hey, do this, and then if they have their custom GPT, then they can try and, like, it's still early stages, but yeah, that'll definitely exist.
Yeah, and that sort of like goes against the front ends being dominant point, right? Because in a world with AI where a lot of, and I think like in a world with AI, a lot more stuff moves to a chat like UI. Like obviously you'll still need, like, front ends are still very useful for a lot of types of interactions, but if we do move to like a more chat based world, then like you'd imagine wherever users are, they'll just have that UI available rather than there being a specific front end that you go to do everything. But
Yeah,
anyway,
I think that'll
move on to the.
Okay, yeah, we'll move on. But I think that'll definitely be dominant for like the casual user, but like people who like want like the trading terminal like feel and like lots of information at once, like you can't really do that through a chatbot, but for casual users for sure. Yeah, we can move on. I just thought the front end point was really interesting, and there's like a lot of kind of projects, competing in the space, so it's worth talking about.
For sure. I mean, I think this is where like wallets and dashboards are pretty undervalued, in that they have like a lot of users, and they are the like frontest of the front ends, right? Like the first interaction of most people with crypto. They just haven't like been able to really build out like a compelling product suite around that yet. But I think it'll happen. But anyway,
no, I just one last.
All right, go ahead.
To a front end, it's like the wallet is no longer relevant, right? Like the you know what I mean, the moat it's generated, I think, isn't really anywhere near strong, because and it's part of their design is they want to be as easily integratable as possible. So I think it's a tricky spot at the same time.
Yeah, I think there's there's like good odds that front ends and solvers is basically what captures most value eventually.
And with solvers, you're just market makers?
For the most part, yeah. Which is, yeah, maybe not great.
Solvers, yeah, like front end, and then instead of having our liquidity pools, we're just gonna get whatever market maker to quote you.
But you can also have an app that has.
I don't see how that's like. It's the status quo is that plus but worse, right? Like market makers, the big market makers have like special relationships with centralized exchanges. They have like zero fee accounts and stuff, so they can trade this stuff back and forth. Like the solver meta is at least like a level playing field, right?
Yeah.
So
also just the solver too can be like an app can have its own app specific like solving algorithm that it owns in like a proprietary way. So it doesn't have to be necessarily like market maker. But let's move on to are we talking about the Solana outage?
Yeah, let's do it. Do you want to give some context on what happened, the client
bug?
bug?
So
and maybe like compared to the last ones, right? Which were yeah.
Well, the last one I think was kind of a bug too. So historically, most of the Solana outages had to do with like NFT mints and spamming the chain, and there were so many inbound spam transactions at once that it kind of overloaded validators. The last couple ones have been client bugs, and so this latest one was a bug that got introduced in a new upgrade a couple of weeks ago, and apparently it was actually found on testnet, but the mainnet fix had not been deployed yet. And so speculation is someone just decided to manually halt the chain because they knew about this bug that was on testnet. But yeah, so that was around like 5 Eastern or something. And then 2 hours after that, they decided to do a full restart. And then 3 hours after that, it was back up. So it was like 5 hours from down to up, 3 hours from when they decided restart to up. So I mean, what's that meme where it's like we're getting exceedingly efficient at this? So like they're getting pretty good at the chain restarts, like the validator coordination. But so it's in. So let's think. Okay, let's see how the market like didn't really care. Okay, it went
they
down.
did it at the worst. Like if this was a malicious like try and halt the chain and short it, it's like picking 5 a.m. EST is like probably the worst time you could have done.
Yeah,
if they were like actually trying to do something malicious.
So here's what I'll say about these like outages. I think the fact that like Solana did not lose any users after this tells you a lot about retail liking to use the chain. And, Solana has something that no other ecosystem has right now. People like to use it. At the same time, you're never going to you can't have a super vibrant DeFi ecosystem handling like billions of dollars if you have liveness failures, right? They're kind of like I understand the decision to prioritize like safety over liveness, but for DeFi, liveness is kind of safety at the same time. It's not like purely a computer science problem you're dealing with anymore. Because you have all these other repercussions, and let's face it, all the outages for the most part have come in kind of like low volatile periods. This last one was the most dead you could possibly think of. The Americans woke up and it was back on. Okay. So there's listen, one of these days, it's probably going to lead to a pretty bad DeFi day because it's going to go down, and then, Putin's going to launch some nuke or something at the same time. And like, there's other factors that come into play of the timing of it, that it's not a good like situation. Right. And so,
I mean, it's less the timing.
There's a little bit of like level setting,
right? Because before there wasn't really any DeFi, so that like the notional, the VAR, right, was pretty low. Whereas as DeFi picks up, you don't really need much of a move for there to be a lot of value lost.
Yeah. And so,
it is worth like contextualizing though a little bit, where like every chain has liveness issues other than like ETH1, right? Like Cosmos chains have liveness issues. Like definitely there's been a couple of outages since the last Solana one across like a lot of the major Cosmos chains. L2s have outages, right? Arbitrum went down in December because the sequencer got overloaded. Like every chain other than ETH1 has had outages. It's just that Solana has the most users and the most eyes on it, and obviously like has a history of this stuff, so it gets targeted the most. But I do think it's worth putting that
this is something I was saying a year ago. Like, people are gonna have to start getting more comfortable with liveness failures, because they are going to happen more and more. And, since L2s are so centralized, it actually makes them having liveness failures not as bad, because it's a lot easier for them to get restarted up quickly. You don't have to coordinate, like in Solana, you don't have to coordinate with all these validators and get 80% stake agreed on something. When you have the L2 with one sequencer, as soon as you fix the bug, it's like, okay, let's get back at it, right? But this is something with Solana that they have the single client, right? Just like Tendermint chains have a single client. These bugs are going to happen. Like, they have to be in your like risk framework or whatever. And so I know Solana has a lot of clients. Obviously, they've got FireDancer. They've also got this other one called Zig or Zug. There's another client coming. And so the theory is that, I mean, in a perfect world, you would have 4 clients and everyone running 25%. And so if one of them has a bug like this, the network can still continue. That's like the ideal world. In reality, we know that's not going to happen. Like, even on Ethereum today, over 80% run Geth as the execution client. So if there's like a bad Geth bug, like, that's pretty bad. And so what like the theory on Solana is okay, everybody's going to run FireDancer because it's more performant, but we'll also run like another client in the background that kind of lags behind. And so if there's like some big bug in FireDancer, everyone can kind of like pick up with the behind client. And so this is like a theory. Okay. I don't know what that handoff would be, especially if one client is a lot less performant as well. Like, do fees just spike on the chain like pretty quickly because now you have a lot less throughput? Are you actually able to do that handoff cleanly without, something happening? I don't know. But that's kind of the like thinking right now on how to fix these liveness issues in the future.
Yeah, I mean, the market didn't really care, right? Like,
I had a poll during the outage. Okay, this was during the outage, and I said Sol ETH is 0.04 right now. Will it be higher or lower in 3 months? And higher was the majority vote. Can you imagine if this happened in July and Sol ETH was 0.01? Okay, so like 75% lower. And I did that same poll on 0.01. Majority would say lower, 100%, right? And so the timing of the outage is good that it happened after like Solana kind of came back from the dead, right? And like path dependency matters so much that if this happened before like the FTX estate, all that stuff, right? When everyone was scared about that. And so, yeah.
I think a lot of people waiting for a dip, and if this didn't cause it, then you kind of need a broader market pullback in order to get it.
Yeah.
Ceteris is always awake. 5 a.m. EST. He hears Solana's down. He instantly wakes up.
And it totally slept through the whole thing. He woke up and it was already back.
There you go. It's decentralized.
Yeah.
So not too much more to say about that. Do we want to go into ETH narratives, and especially like the eigenlayer and restaking points meta?
Yeah, I don't know if we've talked about points, but like what are the things people are looking at right now? I think the two main ones are eigenlayer with restaking. And then today we got an official launch date for 4844, which is the new fee market where rollups can post blobs instead of call data. And so this is like a separate fee market for rollups. It's supposed to be a lot cheaper for them to, post their data. There's like a lot of hand wavy. People will say like 10 to 100x cheaper. There's too many variables at play to know like how much cheaper this is actually going to end up being for rollups. And also like if a lot just start deploying here, it'll get saturated pretty quick, which is like not a bad thing. Obviously, you're facilitating more demand, but it doesn't necessarily mean that fees are going to be a lot cheaper. But this is important because we've seen a lot of rollups start to move from Ethereum DA to things like Celestia. Eigen DA is coming soon. Avail is coming soon. Arbitrum has their antitrust data availability committees. And so it is important timing in this whole narrative of like DA and the optimal kind of like rollup construction. So I imagine you'll see a lot of people talking the next month about ETH beta, just with like restaking is a big narrative. The ETH 4844 is a big narrative. Blast unlock whenever that happens, it's like a big
Blast
narrative.
is end of February right now, so it's kind of the precursor, right? You have, and all those people that put in Blast are decently ETH maxi, so like it's not a scenario where they leave the ecosystem. It's probably one where they just continue restaking into like these kind of these, or dial into ETH beta with all the kind of additional catalysts behind it.
Yeah, I think it's gonna be a good month for some like on-chain stuff. Like I feel like a lot of like the on-chain like kind of like small or mid-cap stuff has kind of moved over to Solana recently. ETH's like died down a lot. I think like the eigenlayer and Blast have definitely taken like liquidity out of the market for ETH. So like Blast getting unlocked, coming back, also them doing like an airdrop, like hopefully it just kind of gets the velocity of money up more on EVM a bit, which I think we should see some action, which is nice. And then you kind of step beyond.
No, I was gonna say, so like, we talked about how the FDB stuff is a bit of a money suck. I think this has the potential to do that later on, but in the beginning it'll be more of a like a vacuum, but in a bullish way, right? It'll, I think, attract a lot of existing kind of ETH and other liquidity, and then you're going to create, like Blast is going to try and basically recreate all of their own ecosystem projects, and so you have a fresh set of incentives for all of that, and it's all going to be looped and gamified. So I think you're going to have, a very reflexive kind of period, but it always, the more reflexive it is, the harder the unwind, and so it can prove to be like pretty bad in the end. But I think,
as much as I think Blast is like a total abomination, it is going to have, I can just imagine, the craziest stuff on that chain, and so I totally expect a lot of people to not even care about any security properties or anything.
No, and stuff's launching there like not super audited.
Yeah, so that I think will be good for EVM in the short term. And if like the broader market holds up throughout these next couple of months, and like tech stocks are ripping and Bitcoin's bouncing really nicely, so like if that holds up, I think you could get some good activity. But yeah, I think like the past few months, the activity's mostly been on like kind of these Solana like on-chain stuff, and then on your Celestias or Says or Ceteris, where it's like you have like potential for like multi-X's on kind of these like massive chains rather than in the kind of Ethereum like small to mid cap, like more on-chain centric stuff. So I think there'll probably be like kind of a rotation back to like on ETH.
Celestia is just staking, right? That's a Cosmos chain. That's what Cosmos chains are always. That's always the narrative.
Yeah, but I'm saying like staking. When you have like the Solana like casino running, and then kind of these like large caps, like during like 2, 3, 4, 5x's that you can like trade on leverage, then it makes the like ETH kind of like that area of like like 100 mil to like a billion, like sub a billion cap on ETH. That's like DeFi or kind of different on-chain plays, like less attractive, especially as like liquidity is leaving to Solana or getting locked in Blast or Eigenlayer. So if that kind of starts coming back, I think there could be a decent rotation there. All else equal, like the market equal and stuff. But yeah.
Do we think Eigenlayer is going to be like, what do you think the Eigenlayer launch is going to be like? Like, how's everyone playing, I guess, their ETH right now? Like, I guess, are you bullish Eigenlayer points or you locking in like fixed yields right now? Like, what does everyone think on that side?
I don't really know. Like, what are they launch? Like Eigen DAs, what's coming first, right? I mean, the liquid restaking stuff. It kind of reminds me of when people were making all these index tokens of LSTs a year ago, and it's just new tokens on top of other tokens to like print more incentives. And so I do think that like liquid restaking tokens will be pretty popular. They're also quite dangerous overall, but I do think they'll be pretty popular. But at this point, it's like everyone is just getting points because it's like, what else is there to do with ETH? There's nothing to do with ETH these days besides restaking, right? And so because there's no trading activity or anything, right? It's all moved. So what are you going to do? You're going to restake it, right? And everyone is kind of just going into the liquid restaking protocols to get, new tokens from those protocols and everything. Yeah. So I don't know. I don't have like strong takes on it. I mean,
yeah. Like I think that there's definitely a window of opportunity where like this stuff goes crazy, but like as Jan is saying, it's like very reflexive. So like it goes crazy to the upside, and then it crashes to the downside.
It's just like, and prices ripped a lot. It's like it's not really gonna. You kind of want to be one of the earlier ones running for the door to some extent.
Yeah, and then you have this, and I know I've like brought up this point a bunch of times, but I think it's an important one to just be aware of. Like, obviously, this isn't happening right now, but as more and more of these infra plays come out with like massive FDVs and like small circulating caps, there's going to be a time where like the tide shifts on this stuff. Like Dimension just launched again, like $1 billion circ, $7 billion FDV. Jupiter launched, 700K or 700 million circ, 5 billion FDV. Wormhole just announced their token. They're trading at like a 5 or 6 billion FDV on the pre-market. Like that's just in the past 2 weeks. Like you have Blast coming out, you have Eigenlayer, like just as some that we've been talking about. And already like, Celestia, which is like tens of billions of tokens to be unlocked. Same with Optimism, Arbitrum, like so like say Sue, like so many of these
it's
unlocks, like it's literally like 50 maybe $100 billion of unlocks coming over the next few years, and that is like going to be a massive liquidity suck on the ecosystem at some point, as like everyone's up so much on their investments and like VCs and teams are selling. So it's just something to be aware of in the background. It's not happening like tomorrow, but that eventually, like there's going to be a time where a lot of this stuff is probably going to be down 80-90%.
I think the setup is also, you have a lot of bullish catalysts in the next few months, right? With Blast, Eigen, 4844, the halving. I think in ETF flows have kind of reversed to being, somewhat decently positive. So you're going to have this massive run up, and it's I think and this isn't, completely finalized, but I think like one initial soft deadline is going to be the first unlock of the first massive like 10-figure FDV.
Well, yeah, here Arbitrum's in March.
Yeah, Arbitrum is a big one, but like it doesn't really, there's not too many on the ETH side. I think it's more of the new ones that are coming out that have
Sui has a pretty big one in May. It's like a couple billion unlock.
Yeah, it's just like, who is going to, like, when they launch this thing, let's say at a $1 billion circulating and like a $10 billion FDV, it's like, they're launching with the market maker to like, they maybe hype up the pre-market like we've seen with like Jupe and Dimension. Not saying like the teams have done that, but like people are kind of like hyping up the price and people anchor their perceptions. It launches at around that price with not that much float. And there's like enough hype and like anchoring that like people will come in and buy it and kind of support, the $1 billion FDV, or sorry, the $1 billion circulating cap. And like, it's not even that much volume a lot of times, like on that circulating cap. And then like the amount of liquidity it takes to support that versus when like the real unlocks of like one-way flow of selling start coming out from like, team or VCs is just like literally hundreds of millions, not billions of dollars of like.
It depends, right?
Offsetting flows. Yeah, it depends how the token's set up, but
yeah, like Sui is not too bad because they raised at the peak of the bull, and I'm pretty sure they raised at like a B or multi-B valuation, and there's a few others like that. There's
they bought back, and they had a killer trade with the FTX estate.
Yeah, exactly. They bought back the Alameda allocation. Yeah, these are all like a lot of these are very different from each other. I think there's like a few factors that kind of weigh into it. If you wanted to do a better analysis, it would be like how many obviously the team like the team allocation is important, investor allocation, but then how many rounds have been done previously and what's sort of like the unrealized gain that these people are sitting on in like dollar terms, and then also just like secondary volume, right? Because Solana was a famous one, right, with SBF's sell me all you can, then go fuck off thing, where the unlock, everyone thought it was going to be bearish, huh?
That doesn't really happen as much anymore. People are selling, but like with Solana, they were doing a lot of restaggering of unlocks, which helped, right? And that I think was one of the big things the market didn't price in. Which you're not really seeing adjustments to unlocks anymore. But you're seeing
some of these things trade meaningfully on secondaries, right? Where the cost basis resets, and that matters a lot. But it's hard to get good data on this. It's just when you look at some of the seed rounds, right? Like you can kind of get a feel for how heavy this stuff is.
Also,
there's definitely
supporting sometimes I think. When the whole market is running, I think it gets also really difficult as a holder to justify. So like Jupe, for example, right? If the whole market is gradually trending higher, how much, upside do you really think there is in not to pick on Jupe, but just because we're talking about it now and it has a pretty high FTV. It's like, I sometimes it's hard to see. I think that's why meme coins do well, right? Because you have these like insane ceilings, whereas like, am I really going to hold something at a pretty rich val for not that much upside? And so that's like the other tricky element for me is who's really comfortable holding these when everything else is doing a lot better.
Yeah, it's just like I feel like we're accelerating into the point where it's like, okay, there was some of these in 2021, but like we're accelerating, and even like going back to 2017, like EOS and stuff, where they raise like insane amount of money and like these absurd valuations. But like now you're getting to the point where it's accelerating, and it's like we've had 3 launches basically in the past 2 weeks of like Jupe 6 billion, Dimension 7 billion, Wormhole hasn't launched yet, but the pre-market string at 6 billion. It's like that's like 3 in the last 2 weeks. It's like it's starting to accelerate because people have like caught on. Like the highest EV thing in the world right now is to get a group of developers, get some good marketing people, raise from some good VCs, and launch a multi-billion.
But none of that's happening now, though. Like all the stuff. The people who are launching now are people who built through a brutal bear market.
Like, this has been true for like 7 years, so it's like it's starting to accelerate. Well,
if you're in crypto, pivot to AI. Like this was like a brutal bear market where most people, like a lot of people, threw in the towel. Like no one was raising money then. Like a lot of like I don't know, the people that are capitalizing on this now definitely.
Yeah, maybe they started in 2021, like when they first saw it get crazy, like the 3-year cycle, 3-year lag, 2 to 3 year lag.
I mean, if you timed it perfectly, you could come in, do a project raise, and then but you still have to like live through, Luna FTX, like the
for sure. But I'm just saying, like, it's like over the past like few years, this trade I feel like has been rewarded insanely.
Yeah, absolutely.
Like you're literally minting like 100 millionaires on paper pairs, like from this like in team tokens from like a project that takes like a few years to do.
I do think that this also could be why like ETH could be a late cycle asset, because as all the unlocks come through, people start to sell a lot of those into like ETH if they want to just maintain like market exposure.
Yeah, it's kind of tough, right? Because it's like, where is this money coming from, and then where does it go? Like, I think a lot of it's coming from the ecosystem, and a lot of it's going to VCs and like founders who like I don't think they're gonna like necessarily redeploy all of it. Like, I think it's
gains though for a while. Like it's not really real gains yet for a lot of this stuff.
For sure. No, of course not, because like there's no way that the market could handle if everyone just started selling these right now. There's just not enough liquidity in the market to handle this. But like that's why I'm saying like at some point it's gonna turn, and it's like these things are gonna be down like 50 plus, 70, 80%.
The one thing I'll say with this is that airdrops at least give retail the first chance at locking in gains, right? So if like you don't like kind of the mechanics of how this works and everything, and you think they're going to be down only with all the unlocks, the first people that can sell are people who got free tokens, right?
Yeah, but it's also like
a lot of simplers too.
Simplers who have like insane infrastructure farm. Like the guy on Twitter, I think Evan, has had some good tweets about this. Like he's been tweeting about like Celestia and Jito in the past like 48 hours, just like saying like, okay, if this was like the top wallet, this is how many tokens they got. And then if they spread it across like 100 wallets or 1,000 wallets, they would have got like 50,000 times more.
Yeah, you're optimizing with full information, right? Like you when you're doing it ahead of time, you have no idea what the thresholds are. And
well, yeah, like who knows how much of this is like being leaked.
Just maybe throw something in. Like, did you guys read that Travis Kling post about like none of this, like the sort of more how this cycle is a bit more brazen in that there's more of an admission that like some of this stuff doesn't do anything and is never going to do anything. It was obviously a pretty negative post, and I guess he's been kind of jaded for a little while. But I resonate with the sentiment of it, at least from my experience in previous cycles. It seems like now there's just more like infra where it's extremely clear that it's like capitalizing on a narrative, and it doesn't really make sense fundamentally. And obviously like meme coins and all this stuff, like it's a bit of a like financial dystopia, like a result of people, a bit of a financial dystopia. Whereas in previous cycles, I feel like the things that succeeded like kind of they had like fundamental narratives that made sense, right? Like Thorchain had a use case that made sense, like the file coins of this world. There was like a narrative behind them that kind of made sense. Where some of this stuff now just makes less sense.
Because that's what the market's rewarding. Like that's what the market's rewarding. Like eventually the market or whoever's bidding up these things will run out of money because it's ridiculous and they're just getting constantly dumped on. And eventually those people will run out of money and the market will become more efficient, and then the market won't reward this stuff anymore. But I
think it's all still on the way up. So you have price discovery. So people keep bidding, whereas kind of the stuff that was previously built reach some level of ceiling because there's either a fundamental way to kind of value it or some other reason, and so it's like speculation ends up being the primary kind of driver of all of this stuff, and because a lot of this stuff is just still going up, money keeps flowing there.
There are some like new apps that Drip House is cool. Forecaster has been getting buzz. I do think deep in we will see some. I know it's like a meme word. I do think there'll be like some real stuff that comes out of that. But to your point, like we have at the end of 2020, we wrote a year ahead and we said it's going to be a big year for infra because we don't have the right infra to scale. And so now it's like, okay, we don't need much more infra. And so, but these things go in cycles between infra app. Like the big app was DeFi, right? But DeFi is really just back end. It's not front facing like tech. It needs to be back end. And so now we have the back end figured out. Now we need to get these like front end applications. So
yeah, no, and I definitely like don't want it to be all like we're bearish. It's just like where we are in the market right now. It's where the incentives are. I definitely think we could do an episode on like, positive use cases and interesting applications. I've been listening to recently, like Balaji just posted like maybe 10 days ago, his like network state podcast. He just posted 10 episodes. A bunch of them are on crypto. It's actually like, if you want some good hopium about the future and how crypto.
Really bullish on network states. I mean, there's still a lot of narratives that I'm really bullish on. I just mean sort of like the stuff that's being rewarded, like you said.
Yeah.
A lot of it is and then there's like the people that see it being rewarded and go to build the same things, and there's like a lot of people front running the meta, like, oh, I'm on this alt L1, and like there's literally nothing here, but this thing's trading at multi-billion dollars. So I'm going to build I'm going to do an NFT collection or an NFT marketplace because it's the only beta on the L1 and like these games being played, which is just, and then people fund it and like it kind of becomes reflexive, and that's a bit of a shame. But yeah, I think we could definitely do an episode on, I think we will actually, like on a week where we don't have as much to talk about, do the one on narratives where we just cover like the main crypto narratives, which ones we're excited about. But network states, there's a lot of really cool stuff happening. Like, let's talk about it on a future episode. But we've been on this for a while. I want to move to altcoin corner if people have stuff to cover. I know Ceteris doesn't like it. You can give your little highbrow snooty rant about how you don't approve of this as the head of our institutional research arm. But the people have spoken and they demand alpha. So we're gonna go quick altcoin corner and then call it. Who wants to start? I mean, Duncan, you dressed up for this one, so maybe you want to...
Synapse sweater on and the mug. And then also I'm wearing the sweatpants, but I'm not going to show you guys that. Because this is kind of what just shows this like kind of these new coins being rewarded with these like high FTVs. But Wormhole is like on Hyper Liquid, I think, is trading pre-market at like 5.7 billion, which is like insane. And Synapse, one of my longtime holdings, is doing so. In the past 7 days, Wormhole's done Portal by Wormhole's done 71 million in volume, and Synapse done 460 million in volume, and yet Synapse trading like 130 million market cap. So it's like 35x difference, and it's doing 5 times the amount of volume in the past 7 days as a bridge. And they also have the vision of like the Sinter chain and like connecting these different roll-ups and EVM stuff. Ceteris, I don't want you to grill me on it because I couldn't explain how it works, but I think it's a very similar vision, and the team at Synapse is obviously really smart, but it's just like goes to show kind of a product with like a lot of users and a lot of usage at like 130 mil.
Yeah, I mean, Bridges is an interesting one, right? Because you had Layer Zero, I think, raised in. By the way, we're investors in Layer Zero, but they raised the last round at $3 billion in like 2021, and obviously since then, I think it's 2021 or 2022. Since then, have had a lot of progress, and then I think Wormhole also raised the last round at like 2.5 or something like this, and like the actual bridges that are trading on public markets are trading well below this, right? Like Axelar, which is doing really well in fundamentals, is trading at like $1 billion or so. And then Synapse has obviously been crushed, trading at like 100 mil or something like this. So it'll be interesting if there is like a repricing once these other bridges launch, which are obviously going to be like huge launches. I think Wormhole and Layer Zero are both like awesome teams, been executing for a while, will be big launches. But yeah, Jan, I know you have some altcoins too you wanted to cover, or do you?
No, I was basically I think like ETH beta is a good setup going into a lot of these unlocks.
Synapse can move the money around from all these chains. They just launched their RFQ bridging, which is basically like,
listen, man, this is what I'll say about ETH beta.
Like of 100K between chains.
ETH and ETH beta you have all these narratives. You had a fucking Solana outage. This is the time when to like kind of make a move, right?
Ceteris, no one cares about the Solana outage though.
Apparently not. It's already above the Sol ETH ratio is already above where it was when it went out. So
Yeah.
All right. You want to go more specific? Right. You want to talk about your roll beta or anything else as well?
Still the fundamentally cheapest protocol in the space.
If the revenues,
how much are they? If the revenues are real, yeah. The market seems to be pricing in that the revenues are definitely not real, which is weird.
I think it's more about the market.
Sorry,
how the market values buy and burn versus a rev share model, where buy and burn just is a much longer time horizon value accrual system versus yield repricing much more near term, because there's an actual yield and so somebody will bid it up to some market equivalent yield, whereas buy and burn is just you kind of hold until it's supply and demand, but you have some assistance on the demand side. But I think it's basically over a longer time horizon buy and burn leads to a higher value, but over shorter time horizons yield does. And then I think you discount buy and burn more based on kind of going concern, right? Because if the value doesn't accrue until far out and you have going concern around the project, then you discount the present value even more. And so I think that's kind of what's happening at the moment. But yeah, the business itself is still burning 2% of supply a month. So pretty nuts.
Yeah, one thing you've been seeing this on Twitter a lot, of like the Dimension airdrop, right? They gave a bunch to like Pudgy Penguins, Mad Lads, Bad Kids, and I own all these, disclosure. But I think it seems like this is a new narrative that is starting to pick up, that people think that NFT communities are going to be targeted in airdrops more. Because it's somewhat harder to Sybil, I guess, because you actually have to like put up meaningful capital to get these things. And I think you've seen bad kids like double in the last week, and Pudgies go up again, and everyone's talking about, are Pudgies going to get like layer 0 airdrop and all this. So I think this is a bit of a narrative shift for like NFTs. I think the targeting them sort of deal. Now, maybe this is just made up by the NFT communities because all these people want free tokens. So, like, whenever I see whenever I see the Pudgy guys and they're like airdrop to us because like we're gonna diamond hand. I mean, I don't know.
Yeah, I mean, we're also like, I guess, in the cycle of large projects doing airdrops, we're a decent chunk of the way through. There's not that many left.
We'll blast and probably Eigenlayer too.
It's gonna stay within blast.
Anoma, Wormhole, Layer 0. There's a few.
Yeah, there's 5 that'll launch in multi-billion-dollar FTVs.
Yeah, let's wrap it. It was a long one. All right, guys. Thanks very much for tuning in for one more episode of the Hivemind, and see you again in 2 weeks.
Bye.